How's it going, guys? Hope you're all well. Welcome back to another video. In today's video, what I'm going to do is I'm going to go over how I stay on the right side of the market more often than not. Now, I get a lot of questions, how can you predict where, price is making the lower high, or how do you know when price is going to go down, for example? And the simple answer to this is you don't. The market's how unpredictable. The market, gives a random distribution of wins to losses, and it's just a probability game. So, if everyone knew when the market was going to turn, everyone would be millionaires, everyone would be sat on beaches with a pina colada, cigar in hand, just doing pretty much whatever they want to do. And it's just not how the market works. So you just need to keep that in mind when it comes to trading. So the first thing that I want to mention is, as you'll notice on the higher time frame, structure will get respected a lot more than it will on the lower time frame, such as the 15-minute. So let's just say this is the 4-hour structure, right? What you'll notice on the 15-minute, right, is you will get price and it'll come down, it'll make a low, a lower high, lower low. And then what you'll notice is price might come back up, take out this high and then continue down. So one thing I've done to remove this from my trading is I focus predominantly now on order flow on lower time frames such as the 15-minute, because what you will notice on the 15-minute, let's say this is the 15-minute swing that we are looking at. Price will then come up and it will come down, and then it will make price action sort of like this, sort of a complex pullback. Then we might get a change of character to the downside, and then price might continue down, fulfilling the expectation of taking out this weak swing low right here. And then as you can see, price has come down and it's fulfilled the expectation. So what you can do is, if you are wanting to trade counter trend, for example, if we come down, let me get the pen tool. For example, if we have come down, we've had a pullback, we've had a take of the low, take of the high, we could take trades then from here, taking it to the upside. But if you're going to do this, what I would do is I would focus on only taking trades, and I would take profits at least at the EQ of the range, because what you might notice a lot of the time is price will come into the EQ and then it will just continue down. You don't actually know when this change of character is going to happen. One thing that I was guilty of when I first started trading smart money, and the first thing, when I first got into the smart money space, what a lot of gurus do tell you, in this space is, you've got to have supply zones here, and then you might have a supply zone, sort of here, and then you might have a supply zone, somewhere up at the extreme right here. And what I used to do when I first started, and what I see a lot of people still doing now, is you'll wait for price to come into, this supply. You will look for your 1 minute or whatever time frame entry criteria in order to take this lower. What will happen then is price will continue. You will take a -1. Price will continue up in here. You'll look for your entry criteria to take lower. You'll take another -1, and then you'll come up. You might come into sort of this extreme. You will look at your entry criteria, look to take it lower. You might end up taking, a 10-hour trade from this extreme down to the lows, whatever it may be. But on the way up, what you've done is you've taken loss, you've taken loss, you've taken loss, you've taken loss, you've taken loss. And once it comes up in here, you've taken 4 and 5 losses. Have you still got the mental clarity and the overall confidence to take the trade to continue to the downside? Not many people have, and this is where I've pretty much changed my trading to follow order flow, because this is what it eliminates. It eliminates taking trades from, here and here and here and here, because what you're going to do is you're going to have specific supply or demand zones in that one specific leg. So if you're following order flow, right, you've got a break here and you're going to have a demand zone here, waiting for price to pull in to continue. And then again here, if you get a break of structure here, you've got a demand zone where you're looking to take a trade from, pull in here and continue. But what a lot of times I do still take, counter trend trades, but it's very rare, and I've got strict criteria around, counter trend trades and what I like to see. But what I do usually for the highest probability, and this is where you've got to practice patience, and this is where you might not get as many opportunities, is you want to wait for this to happen. So this is when and the most likely the low high has been created. So you wait for this change of character first of all, and then what you can do then is you can take trades from sort of right this area, sort of this area, and then maybe down this area, and you can take trades here, 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 and just follow price down, to fulfill the overall expectation of taking out this weak swing low. What can happen is price can then come up here, and what I've been doing of recent is let me just get rid of all this. What I've been doing recently is I've been taking profit at 1 to 5. So this is, a lot easier on my mind personally. And what you will notice is if we get a supply zone right here, right, if we get supply zone and we take a trade using our lower time frame entry, and you know what happens most of the time is I've taken profit at 1 to 5 before it even takes out this low, and you know that's where the secret sauce comes in, because if it's coming down like this, right, and it pulls back and it comes down, pulls back, you know, this right here would be the next liquidity point to be taken, you know, fulfilling the expectation of these lows being taken and the overall trend continuing. So that's one thing that you've got to keep in mind. So what I'll do is I will go, you know, just onto the 15-minute chart and just show you kind of, you know, a couple of examples of where you could have taken a trade and things like that. So we're on the 15-minute, we're on the Euro US dollar right here. And actually what I'll do is I'll use, you know, recent price action and just show you where you could have taken a couple of trades. So what you'll notice here is, you know, we've had a little bit of messy price action. So we've had a, you know, sort of a break of a low here, and then we've had a break of a high. As you can see, we had a change of character. You could take a trade within, you know, this sort of demand area right here. What we've done then is we've come up, we've taken out this, and then we've taken out this. What's happened then is we've come down. You know, you could have maybe taken a trade within here, which would have been a loss. But then it's pulled back into this sort of supply area, continued, and then it's pulled in. And then what we've done is we've taken out this high, we've swept this high, and we've actually not broken structure there, so I wouldn't have taken this trade. Wouldn't be really wise to do that. And then what we've done is we've taken this low, taken this high, pulled back into this sort of demand area right here, continued higher, and then we've come down, pulled up, and then we've had a change of character here. We've pulled, yeah, it's not too much that's clear here, but this is today, right here. This is today, and what you've done is we have had a change of character here. It's come back up, and we're currently in this sort of supply zone. You know, we could see price continue, but at this moment in time, it looks like, you know, prices are just going to continue higher. But that's the overall idea. That's the overall way that I, you know, stay on the right side of the market more often than not. The way I do it is I just follow, you know, 15-minute order flow. So structure for me on the higher time frame is more important. So the 4-hour and the daily, and the 15-minute is just a lot cleaner on, you know, using order flow, because what, like I said before, what you might see is you might see price come down like this, and then you might see a 15-minute come up like this, and then continue down, and it might come up, and then, you know, price is not that clean. So it could end up, you know, looking something like this. And then if you're looking to get involved here, you've taken a loss. And then if you're looking to get involved sort of, you know, maybe here, you've taken a loss. Look to get involved right here, you've taken a loss. So 15-minute order flow for me just makes it easier for me to follow price action. And that's what trading's about, just finding what makes sense to you and just making it work for you, because, you know, some people might see, you know, the market's a little bit different or whatever it may be. Some people might prefer to follow structure on the lower time frames, but for me personally, as I said before, order flow does, you know, it does bring me a little bit more clarity of where price is going and where price is more likely to go. So yeah, that's just about it for this video, guys. If this video did help you out, if you're going to test this out and order flow does improve your trading, I'd be interested to know, so leave me a comment. Without further ado, guys, thank you very much for watching, and I'll see you in the next one.